The World According to GARP was a book by John Irving, was a movie with Robin Williams, and I'm reading the Robin Williams biography, by the way, right now.
Great
so
book.
maybe this is why we're talking about this. But so GARP, growth at a reasonable price. What is it, and do you adhere to that maxim?
GARP was really invented by value investors who wanted to create an excuse for buying growth stocks, but they put at a reasonable price as the condition in for actually defining what it actually really is. GARP really is you're buying growth stocks and you're making an excuse by saying, I'm doing it at a reasonable price. I think it's a very reasonable thing to actually do. Not painting yourself into a picture is important. And there are companies that are always going to trade at higher valuations than other companies. So as long as they continue to deliver on a consistent basis, growth and profitability, or whatever it is, the metric that you want to improve or invest in, then it's a completely reasonable philosophy to follow.
And is there leeway there? If company X is trading at 21 times earnings and you want it at 20 times, I'm not going to touch it at 21 times, and maybe you miss out. Is there some flexibility in that approach? Absolutely.
I mean, even algorithms that are trading based off these kind of metrics, they're constantly evolving and changing. Growth at 5% in a 2% world is pretty good. Growth at 5% in a 10% growth world is not good. So it always comes down to what are you measuring growth against? What are your valuation metrics? And what is your relative valuation metrics that you're trying to use?